You know, I agree about the economic integration, and I agree that one of the objectives has been to, prevent war, and everybody lives happily together, and economic integration is a key element to that because everyone raises their standards of living the way the market works by interchanging, creating opportunities for commerce. But there was another element to it as well, and the good evidence of that is the way the Bundesbank was created by the Allies after the Second World War. They made it completely politically independent from the government because both the world wars were financed by money printing by the German central bank. The best way to fight to avoid a third world war is to make the Bundesbank completely independent, and so it was until 2000, and that's one of the reasons why the Deutsche Mark had a pretty good record over that period of time. But despite that, and despite the EU rules, we're going back to the situation now where the ECB is under control of politicians, which is exactly the opposite of the way the Bundesbank was run, and is now also against logic in terms of keeping politicians away from the printing press because they're ultimately going to destroy the currency by doing crazy things like buying bonds of Greece.
Right. Well, there's a very interesting dynamic going on in the ECB right now, and I agree, James, with your sort of big picture analysis. But remember, Jean-Claude Trichet leaves October 30th, and Mario Draghi comes in as the new head of the ECB. So Trichet is really a short timer at this point. He's only got 3 months left. So he's got a very good track record so far, despite the difficulties. He's not going to want to go out on an inflationary note. He's not going to cut interest rates. He's not going to print a lot of money. He's going to hold the line, and he'll leave with his reputation intact for being a sort of a classic old school central banker. So the political pressure you're talking about, and you're right, there is that kind of political pressure, it's all going to fall on Mario Draghi, and we'll see how he does. I don't know whether the Italian French thing makes a difference, but he's certainly handpicked, and he's going to be the recipient of all the political pressure you're talking about. Now, there is another element in play. It's very significant. It just happened, which is, of course, that it's very obvious from the start that Europe had, or at least the members of the Euro system, had a unified monetary policy, but they had all these diverse fiscal policies. And Greece and some of these other countries, Ireland, et cetera, got themselves in a lot of trouble. Now, my analogy is to the United States, where we have one Federal Reserve and one Treasury. And the Federal Reserve sets monetary policy, and the Treasury, along with the Congress and the White House, obviously, take care of fiscal policy and do all the borrowing. You've never had a Euro Treasury. I think today we do. It just happened in the past month that the ESFS, the European Stability Fund, that was set up, it looks like a sort of special purpose bailout mechanism, and it's not called the European Treasury, but that's what it is. You have a European Treasury run by Germany for the first time. Germany is going to dictate fiscal policy to the rest of Europe. I call this the financial Fourth Reich, and people get upset when you use a phrase like the Fourth Reich, but I say, well, remember the First Reich, which was Charlemagne and, by extension, the Holy Roman Empire. Germany has conquered Europe financially without a shot being fired is something they've sort of always aspired to. So from now on, this is the flip side of the bailout. Now see, Greece right now likes the bailout because the austerity is not going to be as bad as it was. The bond market is not going to collapse. The Greek banking system is not going to collapse. All those things were in play. Now they've been taken off the table because this fund is going to use European credit at 3-4% to finance Greece and give Greece, maybe they'll charge Greece 5%, but they're not going to charge Greece 20%, which is what the market was going to charge them. So they've been able to extend the European credit to Greece. But the other side of that is over time, they're going to dictate fiscal policy to the Greeks. They're going to say, you need to privatize this, you need to sell this, you need to take a hard line with these unions, you don't start an aircraft company, don't do certain things. And that's all going to be dictated by Germany. It was not democratic, nobody voted on it, but that's where we are. And now that's going to extend through all of Europe. So I think that the big news, and this happened very recently, is that the new improved version of the ESFS is in effect a German-controlled European Treasury.